Hi, this is Liqian Ren, Director of Modern Alpha Wisdom Tree ETFs. Welcome to China of Tomorrow podcast series, where we navigate China, India, Japan, and the broader emerging markets with members of Wisdom Tree and other industry leaders. Hi, today is September 3rd, 2024. Happy Labor Day. Today, I'm going to quickly comment on China's August Purchasing Manager Index manufacturing PMI number, a little bit on the foreign news that China might lower the mortgage rates for the existing home loans, which is being a little bit disputed domestically, and I'll go into detail why this might be the case. And also China released the first half number of births first half, and it's lower than last year, and some of the implications and my view on the population number. And then, the theme that we've been covering is essentially the interest rate going down in the US will give China a little bit room in its monetary policy. It's not going to be huge, but essentially China has been it's a position last year that it's going to wait, even though it's very painful wait, but it's going to wait until Fed moves first. So first thing, the government in China, there are two purchasing manager indexes, two PMIs. Government has its one, and then the other private, Caixin magazine has its own survey. They are highly correlated, obviously, but actually here is where sometimes when Caixin's number could be slightly better than the government's number. And usually when this happens, actually the government's number overall is more negative than the private PMI, but generally is closer to the overall situation. And I understand, people have qualms about China's official data. A couple of Chinese data are actually still quite useful. And some of the data, I think that, people always question is like investment data, because investment data is really easy to manipulate. But something like inflation, PMI, and I would say export import, those data are much more closer to the situation. Still, you need to kind of understand the background a little bit to interpret, but these are higher quality data. And so I will say, I think even though the Caixin PMI number, the private number survey is slightly better than the government's own number, which is 49.1. It's manufacturing is in, contraction again. But I think the government's data is closer to the overall situation. The second event that I think for people who pay attention to China probably read some foreign news last couple days that China may lower the home mortgage of existing loans. So the background is in China, unlike in the US, people can refinance easily. In China, the refinancing is extremely hard. And for someone, the new mortgage rate is now closer to 3%, while the existing home mortgage rate is still closer to 4%. So this opens up 1%, difference, which is still pretty big. So a lot of people are repaying their mortgage entirely because they don't want to pay the higher rate. But not everybody has, the liquidity to do that. So there has been, foreign news says China is considering it, but actually, just by Friday and over the weekend, you have this China Merchant Bank in their investor call saying that, we haven't heard about it. I think this has happened a couple of times, and I think foreign, news media sometimes has been wrong and jumped the gun a little bit. And I think it's definitely an area China is considering. And when the situation, when the U.S. rate situation becomes more clear, they will do it, but not necessarily, as reported that they're going to do it like right away. And the main thing is because China is in a really rock and hard place, because if they lower the home mortgage rates for these existing homeowners, then the banks' profit suffered, and banks are mostly state-owned, and if banks need, some of the banks might need bailout, and then that means the government needs to pay out indirectly or directly, depends on how the situation works. Both has happened in China history. So it's actually not that easy to lower the existing home mortgage rates overall, because the banks have their own you can say lobbying, but the Chinese lobbying, they have their own way to push against these kind of policies because they threaten their profitability. So I do believe gradually this will happen, but probably not now, and not until US started quite significant rate cutting. The third thing is China has just released the first half year of population births. So the first half of the year, China has about 4.32 million new births. So for 2024, it's projected to be 8.7 million new births, which will be lower than 9.01 million in 2023. Now, this is an area where I think a lot of ink is spilled. But actually from the economic, both from empirical point of view, and also if you think about, birth decisions in China has been so state controlled. So I personally do not think that, we need more of these rationale to say, hey, not having enough births is going to be significant impacting China's economy. Actually, I think in the next, China was the largest populated country, and in the 1940s, 50s, China's economy was really in the ditch. It's not that significant. If you look at the history, many of the U.S. strategists at that time kind of strategically give up on backing the Nationalist Party, which went to Taiwan, and let the Communist Party took over. And at that time, because China was, even though its population big, it's economically was really tiny, not impacting the world that much. So population has never really impacted China's growth rate that much. So now a lower population is also not going to impact China's growth. So what's going to impact China's growth is really current policy, whether there's more certainty for the government policy. We'll see. But these are the factors that impact China's economic growth. I think the birth obviously is something to pay attention to. It will impact some of the industries, like, for example, demand for housing. Clearly, with less people, less demand. But overall, the growth, I don't think it's something. I think after 1 or 2 years, I've been saying this for many times, is I think finally people are going to start realizing this is not a huge impact. Other than that, I think China's PBOC is still on maintaining the yuan stability. Chinese yuan has increased value because the overall environment is US lowering the rate. But actually there were some rumors, and I think these rumors are likely credible, that China also intervened to not, the rate not to appreciate it too fast. So I think for them it's stability. It doesn't want it to depreciate. It also doesn't want it to appreciate that much. And that is really the number one KPI by the China's central bank. Now, obviously, you may disagree that, should China's central bank number one honor, but we are analysts, it's not I don't have the influence to say what China Central Bank should do. But I think essentially what the China Central Bank will do is that they will still put significant resources behind maintaining the exchange rate stability ahead of significant stimulus. Thank you, and I'll continue to bring these information to listeners. And if you have any questions, definitely reach out and check out our contents on the website as well. We have a lot of blogs, and in each strategy each strategy's website has our holdings disclosed every day. So I think there are a lot of information that could help you understand the situation in China and in Asia broadly. Thank you.